Thank you so much for showing up. My name is Dave Adams. Today we are talking about Brunswick, ticker BC. Before we get started, as always, subscribe, like, comment below. This is a super small pond, so anyone that jumps in will make a huge splash. Please be one of those people. Brunswick, founded in 1845, currently headquartered in Lake Forest, Illinois. This company was one of the more interesting ones that I've researched. It's firmly rooted in the consumer product sector. However, it presented one of the more interesting diversifications of product. And if you just look at the picture I've posted above, this is directly off of their latest quarterly review. And what picture doesn't fit in? I see boats, I see engines, I see treadmills. 10% of Brunswick's revenue is driven from the consumer product sector, specifically designed around fitness and recreation. You can see some of those products to the right. Pool tables is a big one for them, but also outdoor equipment. And one that I didn't know was fitness equipment inside of places like Planet Fitness, Life Fitness, and others. So this is a super small part of their business, as you can see, as compared to the larger portion of their business. 90% of their revenues coming from the consumer product sector designed for marine and marine engines. So pictures on the side there, marine engines, boats, seems pretty self-explanatory. This is an absolutely growing industry. Currently, Brunswick's year-to-year revenue by region, the United States up 8%, Europe up 10%. These two combined represent 82% of their marine revenue, which, remember, was 90% of the company's total revenue. So absolutely great growth from Brunswick here. They outpaced not only what we would expect, but what the U.S. sector expectations were. As you can see here, a lot of information on this slide, but really the focus is how the industry in the bottom right is growing at a 3 to 5% clip. This is engines, this is the boats themselves. So this is a positive trajectory for the primary focus of this company. Here are some of the acquisitions that they've made over the last few years. This has helped them to expand their presence in this growing sector. Here's a snapshot directly off of their their revenue report for Q2. Total marine sales up 8%. Absolutely great. This has expanded the footprint of this division by 2% from the company's perspective. So a thriving part of their business is just growing that much more. Unfortunately, on the flip side of that, their fitness and recreation side is bleeding, down 13.9% year over year. And remember, this represents 11.6% of their total revenue. So that's not good. Revenue versus the profit history they're bringing in, 6.13 is their net profit margin as of right now. And you can see a nice steady upswing in the revenues coming in, the profits following them relatively consistently behind. Those have gone towards paying down a debt nice and consistently. You have to love this chart. You see the nice bump that we saw in 2014. The company managed to bank and grow off of that while still paying down their debts. Debt management since 2011 looks really nice. If we looked at the ratios compared to the stock over the last year, we see a stock that's sitting at a 17.1 PE right now and a price to earnings growth of just 0.5. Price to book is at 3.1 times. All of these are where we would expect them to be for a company that is undervalued as of right now. The dividend, 1.23%, far from its highest point of nearly 9 years ago, and slightly higher than the consumer product industry itself, but nothing worth writing home about. The payout ratio comfortable at 20%, and I put the insider trading on there. Just one major trade happened between 6 to 8 months ago. Other than that, it's been pretty quiet. And remember, the stock's been relatively sideways the whole time. So here's what the analysts think. They see a stock that's at $54.49 with a future cash flow value of roughly $86.21. This gives us an overlay of 37%, which is absolutely phenomenal. The analysts find this to be undervalued currently. So what exactly would the catch be then? Third and fourth quarter historically is rough on this company and this sector if we look back over time. Despite the positive implied values, This is likely a stock for long-term value investors specifically. And what I mean by that is that with a beta of 1.81, which is twice the industry average, this is a mostly marine stock that, despite the pun, is going to experience some choppy waters and a weak dividend. Isn't much support for that rough water. Brunswick's fitness and recreation division is bleeding out, as we saw with its 13.9% year-over-year drop in the last Q2 financial statement. And then luxury purchases such as boats, accessories, simply may suffer setbacks if we do experience an economic correction in the near term. And this, I would say, is doubly bad if it hits at the beginning of next year, which is typically prime time for this company. And then just lastly, to round it out, we have no positive trajectory on the fitness and rec portion of their business, which though it's only 11%, it's 11%, and we have shaky guidance at best. So that's a pretty big wound for me not to know what we're going to do about it. Quick recap as always, revenue has increased by 8.8%, and the acquisitions we referenced attributed 1/4 of that growth. So they have made some good business decisions that have allowed them to grow respectively. And all of this is while gaining only 0.5% in operating costs year over year. So they're making 8% more, they're spending 0.5% more. Good recipe. Strong growth rates in all three primary boat categories, including the outboard engine market, parts and accessories, just showed us a thriving market with a business that understands how to sell within it. And then lastly, global revenue in combined marine segments experienced 8% year-to-date gains, which comfortably outperformed the global market and estimated demand. So what I'm saying there is just they did better than they were supposed to. And so with all that said, disclaimer, Brunswick isn't currently part of my portfolio. I don't necessarily plan on this being a part of my portfolio. I do see a stock that may stay sideways, but I'll go on record as saying I see a stock that could definitely pop up and come back to level with where it should be. A stock that analysts feel is currently undervalued, mind you. So thank you so much for your time. Please, as always, subscribe, like, comment below. I appreciate all of your feedback. Anything you can give me is massively helpful. Thank you. Have a great day.